ประเทศไทยจำกัดมหาชนนะคะขอต้อนรับทุกท่านนะคะเข้าสู่งานสัมมนาการวิเคราะห์เทคนิคในฟิวเจอร์ต่างประเทศกับหัวข้อ using technical analysis on Asian Indices ค่ะขอโทษค่ะซึ่งได้รับเกียรติจากมิสทิวเซฮัวหัวหน้าฝ่ายนักวิเคราะห์การลงทุนในตลาดฟิวเจอร์จากฟิลิปสิงคโปร์ขอเสียงปรบมือให้เธอสักครั้งหนึ่งค่ะขอบคุณค่ะค่ะและสำหรับงานในวันนี้นะคะเราได้จัดแบ่งออกเป็น2ช่วงด้วยกันนะคะซึ่งจะมีการรับประทานอาหารว่างในช่วงระหว่างเวลา 18:45 นาทีนะคะเราจะพักเบรกรับประทาน Coffee Break สักประมาณ15 นาทีนะคะทั้งนี้หากท่านมีข้อสงสัยซักถามกรุณารอสอบถามกันในช่วงท้ายสัมมนานะคะค่ะและก่อนเข้าสู่ช่วงการสัมมนานะคะดิฉันขอแนะนำบริการและประชาสัมพันธ์โปรโมชั่นต่างๆก่อนนะคะค่ะสำหรับบริการของ Offshore Future มีบริการดังนี้นะคะคือซื้อขายฟิวเจอร์ได้ทั่วโลกโดยผ่านช่องทางอินเทอร์เน็ตเทรดดิ้งด้วยเงินลงทุนขั้นต่ำเริ่มแรกที่ 300,000 บาทและเปิดบริการซัพพอร์ตตลอด24 ชั่วโมงนะคะซึ่งบริการนี้เราเพิ่งเปิดตัวให้บริการนะคะลูกค้าสามารถโทรเข้ามาสอบถามได้ตลอด24 ชั่วโมงเลยค่ะสำหรับสินค้าอ้างอิงที่สามารถลงทุนได้นะคะเช่น Gold Crude Oil Index ต่างๆนะคะ Currency สามารถสอบถามรายละเอียดเพิ่มเติมหรือรับคำอธิบายการลงทุนรวมทั้งการสอนการใช้หน้าจอซื้อขายแบบตัวต่อตัวนะคะได้กับทีมเจ้าหน้าที่การตลาดทั้งที่รออยู่ด้านหน้าด้วยนะคะสามารถสอบถามได้เลยค่ะหรือโทรสอบถามได้ที่ Offshore Future Hotline ที่เบอร์นะคะ 026351717 ค่ะส่วนโปรโมชั่นนะคะที่ช่วงนี้สำหรับทางฟิลิปได้จัดเตรียมไว้นะคะโปรโมชั่นแรกนะคะขออนุญาตแนะนำเป็นตัว Refer Friend นะคะจะได้รับ 1,000 บาทนะคะเปิดให้บริการสำหรับลูกค้าที่มีบัญชีขายทุกประเภทนะคะกับบริษัทหลักทรัพย์ฟิลิปเพียงแนะนำเพื่อนให้มาเปิดบัญชี Offshore Future จะได้รับค่าแนะนำ 1,000 บาทเข้ากับบัญชีของท่านภายใน30 วันเลยค่ะสำหรับโปรโมชั่นที่2นะคะคือเทรด Offshore Future กับตลาด SGX นะคะซึ่งเป็นตลาดสิงคโปร์นะคะรับ2ต่อกันไปเลยค่ะคุณสมบัติของรายการซื้อขายที่ได้รับส่วนลดก็คือจะเป็นส่วนลดของค่าคอมมิชชั่นไป 30% นะคะโปรโมชั่นนี้สำหรับสัญญาซื้อขายล่วงหน้าในตลาดหลักทรัพย์สิงคโปร์เท่านั้นนะคะคุณสมบัติข้อต่อมานะคะคุณสมบัติของผู้ที่ได้รับรางวัลในช่วงโปรโมชั่นสำหรับการซื้อขายในตลาดสิงคโปร์จะได้รับเป็น iPad mini นะคะที่เป็นรุ่นที่มี Wi-Fi ขนาด 16 GB ค่ะลูกค้าที่ได้รับรางวัลจะต้องเป็นผู้ที่มีปริมาณการซื้อขายสูงสุด2อันดับแรกนะคะของสัญญาซื้อขายล่วงหน้าส่วนลดนี้สำหรับการซื้อขายตั้งแต่ภายในวันที่1กรกฎาคมจนถึง30กันยาปีนี้เท่านั้นนะคะและข้อสุดท้ายนะคะเป็นโปรโมชั่นสำหรับลูกค้าที่เริ่มเทรดตั้งแต่1สิงหานะคะไปจนถึง31กรกฎาคมปีนี้นะคะจะได้รับสิทธิในการใช้ฟรีชาร์จนะคะได้จำนวน1เดือนค่ะสำหรับการสอบถามเพิ่มเติมนะคะสามารถสอบถามกับเจ้าหน้าที่ด้านนอกได้เลยนะคะและเพื่อไม่ให้เป็นการเสียเวลานะคะดิฉันขอส่งมอบเวทีนี้ให้กับมิสทิวเซฮัวณบัดนี้ค่ะขอบคุณค่ะ
Hello. Hi. Good to see every one of you here today. Yeah, okay, so we will be discussing about technical analysis today. I'm here today to share with you what I have learned over the last few years. And before we move on to today's main topic of this technical analysis, I shall then first touch on about the current US and also Japan situations from a fundamental perspective before I move on to the main focus of technical analysis. Then I will then introduce the technical analysis about its various benefits and the differences between technical and also fundamental. As there are many technical indicators in this universe, I will only be focusing on the most popular one and explain the concept and application on each of them. Using what we have learned in the first session, we will then try to apply them onto charts. Then we shall then conclude with talking about the common myth among traders. So without further ado, let's start. So the disclaimer, whatever material that I'm presenting, I'm sharing today is only for education purposes. So this is a S&P chart. While investors are concerned about the economy, they are actually even more concerned when the Federal Chairman, Mr. Ben Bernanke, says, there is a possibility of reducing or tapering of the current stimulus program. So the answers is actually reviewed on this chart that all of you can see over here. Every time when there's a bond buying is in effect, the stock market has generally performed well. If you look clearer, the two gray lines, it means that that's when there's no stimulus program that's in effect. So hence, the market either has declined or gone sideways. For the first QE, which denotes as the orange color line, Ben Bernanke introduced this in December 2008, and he has pumped in more than 1.3 trillion US dollar in buying mortgage-backed securities, or in short, MBS. The green line over here denotes the QE2, which started in late 2010, where Fed Bernanke recognized that he has to do something else. So he injected a further 600 billion US dollar into the economy, or equivalent of 75 billion US dollar by purchasing treasury securities with longer maturity dates. And follow on, you look at the blue lines is actually the operation twist, and now where we are is actually the QE3, quantitative easing 3. Now every month, Bernanke is purchasing about 80 billion US dollar worth of bonds from the market. So this is a daily S&P 500 chart since all the way from March to the current. Since the last financial crisis that we all faced started in 2007-2008, with one objective in mind, Ben Bernanke introduced or conducts this quantitative easing, QE, is to stimulate the economy and at the same time trying to avoid deep recession. So up to now, he has pumped in more than 3 trillion US dollar into the economy. So, and the financial markets are loving it. If you look at this chart, the market indeed has responded well and has climbed all the way from the 2009 trough all the way to the current high that hit all-time high recently. And now, Ben Bernanke starts to say something on 22nd of May, the very fateful day. After his speech, markets basically collapsed. He starts to say he may be looking to taper the stimulus program if the unemployment improves to 7.2 to 7.3 region in the fourth quarter of this year. And should the economy meet the forecast of growth, about 2.3 to 2.6% for the whole of 2013. So the current unemployment data stood at 7.6. So should markets continue to improve, we shall then see Ben Bernanke will start to taper this stimulus program. According to the Bloomberg pool of survey of these economics, they are now saying Bernanke is likely to taper to announce in the month of September during the FOMC. The FOMC for September month is 17 to 18 of September. They are pricing in he will start to taper in September, but not tonight, because tonight and tomorrow is a very important date for FOMC. They are meeting up also. So I shall then continue to talk about the US economic outlook from a TA perspective towards the end of the seminar. Now, this is Nikkei 225 charts. Again, similarly, Nikkei 225 has been climbing, has been on the rise since November last year, thanks to this Abenomics effect. How these names come about is actually, Abenomics is named after the newly elected Prime Minister Shinzo Abe, whom is also the President Liberal Democratic Party. What his policy is, he introduced or he conducts a massive increase in fiscal stimulus through government spending, a massive increase in monetary stimulus through unconventional central bank policy, and a program, the reform program, aimed to make structural improvements to the Japanese economy. So, in a nutshell, Abenomics amounts to one of the biggest economics experiments in the modern world that we have ever seen. And likewise, the financial markets are loving it. And as such, the Japanese market has been also on the rise. So, what exactly it is, and how is it expected to work? While fiscal stimulus and structural reform are essential components of this experiment, monetary policy is expected to do most of the heavy lifting in the short run. The goal or objective of this whole monetary policy is to reduce the real interest rate. In Japan's case, it has a significant side effect or cons that brings to the yen, meaning to say yen has been weakening since then. Sorry. Because if you look at here, this is the dollar yen that we plot together with the Nikkei 225. Thanks to the Abenomics' aggressive weakening of yen, it has benefited both the yen and the stock market. Like we all know, Japan is a very export-oriented country. So whenever yen weakens, it makes the Japanese goods actually more affordable to overseas buyer, or what we call importer of Japan's goods. And also, it allows the company, for example, Honda, Nissan, Sony, Toyota, are able to register a higher translation gains from foreign exchange. Secondly, like I mentioned earlier, because of a weaker yen, it allows them, people will tend to buy more Japanese products now. So in a nutshell, it will definitely increase the corporate earnings of it. And as such, the Nikkei has been on the rise. This is a dollar yen versus the Nikkei 225 prior to the financial meltdown in 2007-2008. Both the currency and the Nikkei component, the stocks, has been moving rather highly correlated. The reason why yen actually strengthened all the way during the crisis is because investors, in times of crisis, investors flock to buy a safe haven currency, namely Japanese yen. Likewise, I will be coming back to Nikkei 225 at the end of the presentations when I cover the outlook. So, we shall then focus on the main agenda for today, technical analysis. So, technical analysis is not only about technical indicators. It also encompasses like sentiments, financial behavioral, and then intermarket analysis, cycle analysis. However, today we will only be covering a section of it called indicators, which is a subset of the whole technical analysis universe. So this is so much to learn in the whole technical analysis. So content, introductions, I will start by talking a brief introductions before we move on to the benefits of using TA. These are the few indicators that I'll be introducing. MA means moving averages, MACD, moving averages, convergence, divergence, trend lines, support, and resistance. We shall then look at all these indicators and apply them onto a very simple and straightforward trading system that I'm going to introduce today. Follow on with Outlook. Before we wrap up by touching a brief talk about emotions in trading, you are actually the greatest enemy in trading. And we will wrap up the whole seminar by discussing the common myth that has in every investor's mind. So, what is TA? Technical analysis. TA analysis or technical analysis is used to forecast or to predict the next price movement using the past historical price movement. It helps investors to anticipate what is the likely scenario to happen next. The beauty of this TA is it is a skill that you can apply on any financial instruments, be it stocks, be it financial indices, be it commodities like gold, crude oil, or even your foreign exchange, forex. So it has a rather wide applications usage. And also, this TA is applicable to different time frames. For example, intraday like 1 minute chart, 3 minute chart, 5 minute charts, daily, weekly, monthly, or even yearly data that you can plot. So the technical analysts believe that the current price fully reflects all information. So because all information is already reflected in the price, it represents a fair value and should form the basis for analysis. The goal of the chartist is actually to identify a trending period. We shall expound on this further. So, benefits of using TA. On a chart, it allows a trader to know whether the momentum is rising or the price is currently dipping, or even if a trend is forming. All these are important information for a chartist to derive its conclusion. And this beauty of these price charts give you a complete picture of a price history over a period of time. It can also depict the history of the volume of the trading in a particular financial instrument. Now, with the advancement of computer, it has helped us to relieve pain from knowing the complex mathematical operations behind. By just a few mouse clicks, you are able to pull any indicators with instantly. You will be able to get a chart quickly. So this is what we mean by is less time consuming as compared to a fundamental analysis. For example, if an analyst need to evaluate a stocks, this person need to attend analyst briefing, company briefing to get a what we call annual reports of a company, then have to evaluate the balance sheets, the cash flow statements, and etc. and etc. All these are rather time consuming as compared to if you are a technical analyst, whatever, because his belief is whatever information in the market has already priced onto the chart. So And also, charts provide a wealth of information. For example, it serves as a support or resistance. Supports are actually a price level which are likely to bounce off from the floor rather than break through it. So the reverse is true for resistance. Resistance level is a price that is likely to bounce off the ceiling rather than break through it. And hence, because of this usefulness, they offer a potential entry or exit for the traders. Besides, the concept of support and resistance can also be used as a reference point when looking at a chart and trying to make a decision. They can give you a good idea where to put your stop loss or even profit take orders. So these are some of the charts, some of the indicators that we will be introducing today. Fibonacci retracement, MACD, trend lines, and etc. So, with one objective in mind, both fundamental and technical analysis share the same goal, that is to seek the next price movement of a financial instrument. However, what it differs is actually the approach. For a technical analysis, you need price and volume to get to know the outcome of this price. Whereas, for this fundamental analysis, you relies on other underlying factors such as economic factor, industry factor, company factor to derive the same outcome. For example, for a stock index per se. So generally speaking, people tend to associate the shorter time horizon to a technical analyst and associate the longer time horizon to a fundamental analyst. And hence, there is a tendency for people to use both fundamental and technical analysis in isolation. The truth is, actually in reality, they can both be used complementary. Do allow me to explain further. So, when a fundamental analysis is used as a core approach, how TA can come in handy is it tells you where to enter the market or where to set your target profit or your cut loss level. In contrast, if a TA, technical analysis, is used as a core approach, how fundamental can become useful is to determine the market slant. For example, when Feds conduct quantitative easing, QE, the general trend of the market is up. Hence, if you slant the directions of your trade to go with the general upward trend, your probability of making money will be higher even if you are trading short term. Secondly, FA fundamental analysis can also help to identify risky trades. Let's look at one of the examples. Assume that a pure TA trader uses 20-minute moving average as a signal to trade. So, when the price of an asset, which represented by the black line, cuts below or cuts downward the red moving average, it represents short. The reverse is true. If the black line cuts above the red moving averages from below, it means it generates a buy signal. So if you look at here, for the first half of this chart, a trader is more likely to make profit from his long trades. On the second part of this chart, a trader is more likely to be profitable by shorting trades from his short trades. If you focus on this is the last open position this trader has, meaning to say this is actually a dollar yen that cuts below the 20 period moving average. It means it's a short signal or sell signal. This is what happened on the next minute. If you look at here, this is actually dollar yen spike 150 pips. It means that the yen weakened against the greenback or the US dollar by a whopping of 150 pips in just 1 minute. If this person or this trader did not cut loss, make a guess what happened next. After 13 minutes later, dollar yen continued to spike another 124 pips. So within such a short span of 20 minutes, this person have lost more than 270 pips in a blink of an eye. So this is what we mean by if a fundamental analysis had been used to complement this technical trade, the trader could have noted two important facts. First, on 30th September back in 2011, Bank of Japan, BOJ, increased the limit by 15 trillion yen, or back then it is worth about 195 billion US dollar. Second important fact, prior to this incidence of this intervention, Bank of Japan has actually intervened twice in 2011. If you will look at this daily chart of dollar yen, the blue arrow denotes this is when the increased limit took place. I do agree, nobody will be certain when Bank of Japan will intervene. The fact is, the limit has just been increased and Bank of Japan has been intervening twice prior to this occasion, below the 77 level. So, from a fundamental perspective, shorting dollar yen may be looked too risky to trade, to enter, especially after dollar yen began to trade below the record level indicated by the blue line. So what the trader could have done is to continue using his TA to generate the trading signals, but only to trade from the long side, meaning to say on the buy side. So this is a classic example of how a fundamental analysis can be used to complement a technical trade. So, equity index by SGX. These are the 12 equity indexes currently offered by SGX. Not to worry, I will not be going through all the contract specifications. Okay, the market volume for SGX. The FTSE China A50 has cleared calendar year to date, meaning to say from January to 30th of June, it has traded more than 10.6 million of contract. For MSCI Singapore Index Futures, or in short SIMSCI, has cleared 1.9 contracts. Nikkei 225 has cleared 23.67 million, and Nifty has cleared 7.8 million contracts. So these are the 4 contracts that we will be focusing, and all our technical indicators that we are sharing today will apply on these 4 charts plus Dow and S&P charts. Moving averages. So MA, moving averages, are very common and popular among traders because it helps to smooth the price data. They are rolling averages of the price data. So what it does is it helps to smooth the price action and filter out the noise. Noises on the chart confuses traders. So when the noise on the charts are removed, the trader can see a clearer trend. The question is how much to smooth, meaning to say how many number of periods you want to use to smooth the data. The answer is there's no hard and fast rule. It really depends on your personal risk appetite. So a shorter term MA generally generates more false signals during a sideways trading market. The benefit of it is it has better price sensitivity. The contrast in true, the reverse is true. If a longer term MA is used, it generates less false signals. However, it is not sensitive to price reversal, or it is less sensitive to price reversal. So smooth your data point according to how much you want to balance the number of false signals to sensitivity. Well, looking at example, I think will be much easier. There are three common trading signals that can be used by moving averages. First is price crossover. Second is double MA crossover. Lastly is support and resistance. So if you look at this chart, this is actually a daily chart of Singapore FTSE China A50. The pink color line over here is actually a 50 period MA. So how does it work and what does it mean? When prices cross above the MA, the moving average, it generates a buy signal. And if you look at it, prices in it go all the way up higher. And over here, when prices of China A50 cuts below the signal line, it actually means a bearish trend, a sell signal. What you notice over here? This is what I mean by it gives a false signals, or it gives noise in the market during sideways trading ranging market. Let's look at another example. Everything remains the same. Daily chart for A50 with the same time zone. What is different is this pink color line. Now I have replaced using 100 period MA. The trading signals remain the same. When it cuts above, it means a buy. When it cuts below, it means a sell. Look at here. This is where we want to focus at. Now, it gives us less false signals, or less noise we call it, because it helps to smooth the data, because we are using a longer time period of MA. Likewise, everything is the same. Now I'm using a 200 period MA. If you notice, on the first chart, when we were using 50 period MA, this is where our long price, which is about 7,000, and now the trading signals is actually above the 7,500. So this is what we mean by less price sensitive if you use a longer term moving average. Likewise, the sell signal over here is much lower compared to if you are using a 50 period MA. So, however, the benefits of using a longer term MA is actually here. It gives you less noise, less false signals during the sideways trading market. So there are pros and cons using a shorter versus a longer time moving average. Okay, this is a second common trading signals that we are introducing today. That is to use double moving averages crossover. What do you see on the red is actually a 50 period MA. The black line denotes 100 period MA. So when the shorter period cuts above the longer periods, it generates buy signal. We have three signals over here. When it cuts above, it means a buy. When it cuts above, it means a buy. When it cuts above, it means a buy. Over here, now, if you are looking at sell signal, is when the shorter period cuts below the longer period from above. Cuts from above, it means a sell signal over here. Likewise, over here. The 50 period MA is hugging closer to the price because the time that you are using is only 50, whereas this one is 100. So let's say if I'm using a 200 period MA, it will be even further away. So this is what we mean. The third trading signals over here is actually moving averages can be used as a support and resistance. In this, a very nice uptrend for Nikkei 225, whenever prices touches or break slightly below, it bounces off and continues its trend. Likewise over here, touch, and bounce. So this is what we mean by it can be used. These are the three common ways that you can use MA with. So now that you know what is MA, we can then discuss further about MACD, moving average convergence divergence. This is a slightly more complex version of moving average. So in short, I will just call it MACD. It's very mouthful. This indicator is developed by Gerald Apple, and this is useful to identify the trends using two MA, which is the 12 period and the 26 period. So this indicator, like I just mentioned, it consists of two lines, okay? The MACD black line is actually the difference between the two period MA, 12 and 26. Whereas the red color signal line is actually a 9 period EMA. So what does it tell us? As the name implies, the MACD is all about convergence and divergence. Convergence occurs when the two moving averages move towards each other. Divergence, it means that when the two moving averages diverge away from each other, tearing apart, move away from each other. So when the shorter period, which is the more sensitive period of this 12 period, is faster, because the 12 period MA is actually is faster and is more responsive compared to the 26 period of MA. And hence, when the 12 period is above the longer period, 26 period, the MACD is actually above the zero line. I think I will not go into detail about the mathematical behind, but the more important thing over here is how to use it and what does it mean. Okay, so it means we have three common trading signals that can be used by MACD. That is the signal line crossover, zero, or what we call it a center line crossover, and the last is convergence, divergence. Okay, this one, MACD crossover. If you look at here, this is a Nikkei 225 charts. When MACD cuts above the signal line, it actually means a buy signal. So the reverse is true. If MACD cuts below the signal line, it means time to sell. Let's look at another example on Nifty. It's the same. We are applying these same concepts on different asset classes. Let's say now we move on to Nifty. MACD cuts above signal line is where we want to buy. The black line, it means MACD. The red line over here is actually the signal line. So when the black cuts above the red, it means a buy. So the reverse is true. When the MACD cuts below the signal line, it's time to sell. Again, for Simsky, cuts above, buy, cuts below, we sell. Now, this is the third strategies over here. No, sorry, this is the second strategy that we're sharing today. So, a bullish signal is generated when MACD crosses above the zero line. These crossover signals are in essence indicating that the 12 period MA crosses above the 26 period MA. On the other hand, a bearish signal is generated when the MACD line crosses below the zero line. Now, the third strategy is over here, divergence. So, a bullish signal is given when the market make new low. If you look at here, market make new low, while the MACD does not confirm it. Since MACD line does not register a new low in tandem with the lower price in Nikkei, it indicates waning downside momentum. So, on the other hand, a bearish signal is given when a new price high is not accompanied by a new MACD line. So this is a bullish divergence. What we mean by that is when prices keeps going down, MACD usually should go in tandem. MACD should go down also. However, in this case, MACD does not confirm it. In fact, it went higher and higher. And as such, this is what we call by divergence. In this case, it's a bullish divergence. And indeed, true enough, subsequently, Nikkei fly. Okay, trend lines is the third indicator that we are sharing today. We need to start from the basic. Do not underestimate trend lines. You make money by just knowing how to apply a ruler. So our basic system, trading system that I'm going to share shortly, rely heavily on trend lines. Okay, most technical traders are built on the assumptions that prices trend. Trend lines are an important tool in TA for both trend identifications and both trend confirmation. So a trend line is a straight line that connects two or more price points that extend to the future to act as a support or resistance. And the second high must be higher than the second low must be higher than the first low in order to get a positive slope. So the steepness of the slope represent the bullishness or the bearishness in the market. For example, if this line is very steep, it means that market is very bullish. So how do we know when this trend actually reverse? That is when prices breach the trend line, and then it means that we are on alert, raise red flag. Okay? And when prices break below this, the most recent trough, it means that there could be a potential trend reversal. So likewise, on a downtrend has a negative slope and is formed by connecting 2 points and extend to the future to serve as a support or resistance. So likewise, the second high must be lower than the first high in order to get a negative slope. The more points a trend line connects, the stronger it can act as a support or resistance level for future price. Reason is being, more market participants are aware of it and will react at these key support or resistance levels. So trading strategies using the trend line is very simple and easy to follow. We shall then look at it. Okay, this is a Nikkei 225 chart from last quarter of 2012 all the way to the current price. A nice uptrend is formed. And now, if you look at here, like I mentioned, prices breach the uptrend. So it means that it gives us an alert that could be a potential price reversal, raise red flag. However, it did not break below the most recent trough. So in our opinion, it means that prices are intact. The trend are still solid and intact. Over here, connects 2 points. The second low is higher than the first low. That gives you the positive slope. And extend to the future, it acts as a support in this instance. And when prices breach this level, it alerts us because it could mean that there is a potential reversal. Raise red flag. And indeed, over here, prices break below the most recent drop. In our opinion, I will deem it as trend reversal. However, in this instance, market rebounded up strongly thereafter, and now it tried to challenge this level again, and before it bounced all the way off on the high again. So I guess we shall take a short break of 15 minutes for coffee break. Then we shall resume by 7 p.m. Thank you.
โอเคค่ะ เดี๋ยวเรียนเชิญพักเบรกด้านนอก 15 นาทีนะคะรับประทานอาหารว่างค่ะ เดี๋ยวกลับมาพบกันอีก 15 นาทีนะคะ